Moving average crossover. Hey guys, and welcome back to a new video on Tradingfyive. And today we are going to discuss about a moving average based strategy, a setup which is called as moving average crossover strategy. That's right, and as you see on the screen, the candlestick chart and a red color line which is 20 moving average. Now 20 SMA means that this moving average is formed by considering the past data of the price for 20 days. And this moving average can be used for trend identification as well as support and resistance for the price. I have made two videos on my channel on basics of moving average and support and resistance using moving average. You can watch them later. Now let's look at what do you mean by crossover. You see, whenever a moving average with a certain length cuts the another moving average with some different length by crossing it, it is called as the moving average crossover. That's right. If any two moving average interacts with each other by crossing their edges, then it is said to be as the crossover. And in technical analysis, there are two types of crossover. First is the bullish crossover and next one is the bearish crossover. And now let's look at the bullish one. And like as you see on the screen, bullish crossover is when the fast moving average crosses the slow moving average from the downside. Right, and fast moving average means the one with a shorter length. And the slow moving average has the longer length. So let's say the blue colored line is 20 moving average and the red color line is 50 moving average. So automatically the blue colored line becomes the fast moving average and the red one becomes the slow moving average, because the 20 length of the blue colored line is of course shorter than the 50 length. And when such a crossover where the fast moving average crosses the slow one, it is called as the bullish crossover. That means after you see such a crossover, after you analyze them, you can find that the market will be rising, it will be in uptrend, and that is why it is called as the bullish crossover. The next one is the bearish crossover. So let's see how this crossover looks like. So as you can see on the screen, whenever the fast moving average crosses the slow moving average from the upside, it indicates the bearishness in the market. So let's just continue the previous example and let's keep the blue colored line as the 20 moving average and the red one as the 50 moving average. So whenever the blue colored line, that is the fast moving average, crosses the slow moving average from upside, it is called as bearish crossover. And after such crossover, you shall look for selling in the market or exiting your position. Okay, and just understand this concept good enough that whenever the fast moving average crosses the slow one from downside, it indicates uptrend, bullishness in the market. And whenever the same situation happens from the upside, it would indicate bearishness. So just remember this core concept. And there are multiple pairs of moving average that you can use. Like in this example, I have used the 20-50 moving average. There are other pairs like the 7 and 21 moving average. And one more that people use, that is 13 and 34. But in this video, I am going to teach you this strategy which contains two types of moving average crossover. And if you understand and use them properly in the market, they can get you huge profit, huge potential gains. So let us look at the first crossover, which is the golden crossover. So in this type of crossover, we use two types of moving average. First one is the 200-day moving average and the another is the 50 moving average. So whenever there happens a crossover between these two moving averages, whenever the 50 SMA crosses the 200 SMA from downside, it would simply mean a buy signal. That means we have to enter, we have to make position exactly over here. You can make huge money in the market as you can see on the screen. It's that simple. You just have to find such type of golden crossover in the market, and there you have to make a trade with proper risk and money management. Right, and let me tell you one important thing, that you have to take a trade on golden crossover only if the market or that particular stock is trended. If such type of crossover happens when the stock is running sideways, then I prefer that you avoid it. Yeah, that's the golden rule for the golden crossover, that avoid such crossover in sideways range and take a trade only when this golden crossover happens in a trended market. The next type of crossover in my strategy is the death crossover. And also in this type of crossover, we use the same 200 moving average and the 50 moving average. And so you see, whenever the 50 moving average crosses the 200 moving average from the upside, it is called as death crossover. And like as you can see on the screen, that's where exactly a death crossover happens on the chart. And of course it is a bearish signal for us, and that's where you will look for selling, shorting the trade. And that's where you protect your capital or the profit that you have made in the market previously from huge loss. And this whole strategy goes like, you buy on golden crossover and then you patiently wait in the market where you are making profit. And whenever the death crossover happens in the market, you sell your position and book the profit. That's exactly how this crossover strategy is done. And let me show you one another chart where I have told you to avoid this type of strategy. You see, whenever the market or a stock is in sideways, at that time the 50 moving average and the 200 moving average are almost moving aligned. So you will find multiple golden crossovers and death crossovers happening nearly at the same time. So let's say if you buy on the golden crossover in a sideways range, and if luckily the stock gives a breakout, then only you will make a profit. Or else you will have to stop loss a trade on the next death crossover. And that is the reason why I am telling you to follow this strategy only in the trended market and not in the sideways range. Okay, and so lastly, thank you for watching this video till the end. If you think that this video has provided you some value in terms of trading and making money in the stock market, please do like it and subscribe to the channel. Share this video to many people as you can, and I will see you in one of my next video. Till then, keep trading.